Stocks are higher following Wednesday's big sell-off. We're reacting to Apple and Facebook earnings, the latest in the Gamestop saga. There's the Dow up almost 600 points. S&P's good for nearly 2%. NASDAQ better than 1%. Russell is good for 1/3%. It's good to see everybody. Josh Brown, I'll go to you first. What the market taketh away a day ago, the market's trying to give it back today. Your thought here on post big tech earnings, at least a couple of them, what we're seeing so far in the trade of this market.
Well, the earnings for the largest components of the indexes were fantastic. Like, there's no way to really look at them and say anything other than that. So you did have an initial knee-jerk sell the news. That happens all the time. But I think if you're a long-term investor, not based on memes, but like for retirement, you're looking at these names. You're looking at Apple report $111 billion, services revenues through the roof. iPad grew 18% year over year in the quarter. Remember when iPad was a dead product line? Like everything that you would want is revenue for wearables up 30%. Like all of the superlatives are there. So you say to yourself, hey, look, I got an opportunity. Even Facebook looks like it wants to bounce. So these are the market caps that matter to what the market does. So when you cite the Dow up 600-something points, the S&P, it's not moving on Tootsie Roll or AMC theaters. It's moving on these stocks. So that's the story today. And I know a lot of other stories right now, which I'm sure you'll give me time for.
I definitely will. Court, but what does it say about, yesterday you're down as much as today you're up? And not much has changed, right? I mean, Apple expectations were high going in. Apple knocked it out of the park. Now, Apple may not be participating today as some would have expected given the numbers that they produced. And we don't have to talk about Apple specifically at this very moment, but just the market environment that we're experiencing over the last 24 hours.
Hey, Scott. Good to see everybody here today. A lot has actually changed in 24 hours, right? And so without us actually speaking to the big elephant in the room yet, when we think about what people had to do to cover shorts, they sold their winners and they had to sell the names that were the most liquid in order to do that. And so when you look at some of the numbers, like Apple produced $111 billion in sales in a quarter. Right? I mean, they're like a small country in and of themselves. There's absolutely zero reason that name should be down today other than people that potentially were forced to sell for one reason or another. So, I think that's what you're seeing today. You're seeing people going back in and buying up names that they know for the long term are going to be incredibly well positioned, like the Apples, like the Facebooks. I mean, 7% of the S&P sits in one name, right? So, I mean, let's really think about what we're seeing here. And obviously the VIX in and of itself, I don't know where it is right now, but I think it spiked north of 30, right? And it was a risk-off trade that we saw yesterday, and suddenly folks are kind of coming to their senses a little bit today and picking up names that they know are going to perform well for the long term. So
I want to be clear. You think, because Stephanie Link thought so yesterday as well, you think some of what happened yesterday was directly related to what we've all been watching and witnessing with GameStop?
Oh, absolutely. This market is not one name, one player, one institution. Just as the U.S. trading markets are now global, just as our economy is global, what happened in GameStop yesterday had incredible implications, and it's not because of retail investors. And let's, I don't want to jump to it unless you want me to, Scott. This is your show, your world. But I do want to just point out, when you talk about 70, 80 million shares traded yesterday alone, Courtney, Josh, my mom, they're not out there able to trade that much stock in one day. That's institutional money. And so, the momentum trade that happened yesterday was absolutely piled on with quants, which is not a bad thing. Like, I want to be very clear. These are strategies that occurred. But the quants, the large index funds, the institutional asset managers that we cover at Loop Capital Markets, those players were involved. So whether it was for the same reasons as the initial retail investors or not, those players were incredibly active, and they had to be given the trading volumes that we saw.